Yo, ladies and gentlemen, welcome to tonight's video. We're going to be talking about this problem that we have with the dominance of the dollar. I've said it to you once and I will say it to you again. Bitcoin will not go nowhere unless the dominance of the dollar actually starts to falter. Let's just go on to the high time frames of the dollar index itself to understand where we are right now in the chart. Well, look, this is the hour time frame. Okay, looks like the dominance of the dollar is starting to roll over. Let's go on a higher time frame and understand where we are with the dollar itself. Here we go. Zoom out. The dollar has dominated the markets completely. Now it's getting to a point where it's starting to become a problem for global trade. Now, we spoke about this last night in relation to understanding why the Fed needs to be very hawkish, because if the Fed is hawkish, then that would give room for the dollar itself to drop. But this video is designed at helping you understand that the dollar dominance is always going to dictate what happens to assets across the board. Okay? So let me just remove this right here. Clean up the chart. What do you see the dollar dominance doing right now? It looks like we are formulating a beautiful M formation. Well, hold on a second, Tino. Before you start diving into this madness of the dollar, what is the dollar index made up of? I'll tell you now. The dollar index is made up of a basket of assets. Okay? We have the euro, which makes up 57% of it, the yen 13, the pound sterling at 11 or 12, the Canadian dollar 9.1, Swedish krona 4.2, and the Swiss franc at 3.6. So if you're going to trade purely off the principle of the dollar index, the main assets you're going to be looking for is the euro, the yen, and the pound. Okay? If the euro starts moving, then you can bet that the yen is going to be moving, and of course, the pound will follow suit. Now, remember, pound and euro are correlated to the dollar index itself in relation to the fact that when dollar index goes up, euro and pound are going to take a nosedive. Okay? However, when the dollar goes up, the Canadian dollar experiences the pain because the US dollar against the Canadian dollar will see the value of the Canadian dollar drop against the dollar. So what do I mean about looking to try and trade off this narrative? Well, just check this out over here. This is the dollar index chart, all right? If I put a comparison to the dollar index and put up Euro USD, you'll see that as the dollar index rises, Euro USD takes a nosedive, all right? Let's add another asset to it. Let's add GBP USD. New price scale. There you go. Married up and matches up with the dollar dominance itself. So when the dominance of the dollar rises, these assets are going to be going down lower. Now let's start looking at other assets that could affect the dollar index or is affected by the dollar index. So let's look at Bitcoin. Now this is Bitcoin on USDT. All right. Sort of following the narrative. Bitcoin goes down, dollar is going up. Yet Bitcoin, whilst the dominance of the dollar is holding and looking like it's getting ready to roll over, Bitcoin has been trading sideways. So could one make the assumption that Bitcoin is the hedge against the dominance of the dollar? Could that be something that we could accept? Why? Could we agree with it? Remember, Bitcoin trades against the dollar. Let's just take gold for a second. Let's pull up gold in terms of Forex. Let's just change it to XAU. Whoops. AU. USD. Goodness, what's going on here? There we go. How does gold fare against the dominance of the dollar? Well, look at this. Dollar rises. Gold goes down. The drop down in the dollar, gold rises. The rise up in the dollar, gold drops. Yeah? It looks like collectively that we have got ourselves a couple of W formations inside of Bitcoin and the gold itself. Principle would say if the dominance of the dollar rolls over, then we're going to see the assets against the US dollar appreciate. Okay. Now, what is it about the dominance of the dollar that you really need to understand? Well, let me just show you something. Go into the 1 hour time frame. As it stands right now, in relation to the hybrid system, one would assume that the dominance of the dollar is getting ready to roll over, given that we've had 1, 2, 3 hits of the vector candles, and we've had this aggressive move up. The next point of interest in the dominance of the dollar is this zone right here. The meeting that's going to happen tomorrow by the Fed Chair Powell at 3 p.m. is going to be designed at, in essence, bringing the dollar's value down because it's hurting trade. All right. The stronger the dollar, the harder it is for foreign borrowers of the dollar to pick up dollars because it's going to be harder for them to return the investment because the strength of the dollar is huge. The dollar needs to drop down. Now, dollar has been rising up because this is what people have been turning to. They've been turning to the safe haven of the dollar. Now, we've had a war. We've had inflation. The R word is being thrown about. But when the dominance of the dollar starts to falter, especially at these levels at 108, so the dollar itself is appreciated by 8.1%. That is huge. Okay? So as much as you are having and holding a valuable dollar, other assets across the world aren't going to see the benefit of that. You see, it's good when the dollar is strong because now with a stronger dollar, you can pick up more stock. All right. But you want to pick up more stock. And you can do that with the dollar itself being so strong. But what about an asset that is expensive anyway? You're pretty much getting like for like. How can we use the dominance of the dollar to project Bitcoin's movement? Now, you see, Bitcoin hasn't really been sticking to the dollar dominance. In other words, when the dollar rises, Bitcoin principally should be dropping. But Bitcoin hasn't been dropping. Again, is the idea that Bitcoin itself actually acting as a good hedge against the dominance of the dollar. Yeah? Look at that. Look at what it's been doing. And this is on the 1 hour time frame. Dollar's been rolling over, but Bitcoin has been holding and moving slightly upwards. Okay, so that's good news for us. Now, something I want to share with you in relation to understanding the hybrid system when you are looking at exploiting the dollar dominance. This was an image that I shared earlier on with the patrons of the channel. This is the 10-hour time frame. Sorry, the 17-hour chart of the dollar index. So for the last 17 hours, the dollar index itself has come from the lows and moved all the way back up. And I shared this image 31 minutes before this candle closed. Why did I do that? The reason I did that, ladies and gentlemen, is because of this big wick. This wick tells us that something is going to happen at the start of the next candle. You see, the fact that it's been rising up for the past 17 hours and in the last 31 minutes, it's starting to falter and hold inside of this range tells me that the interest of traders inside of this zone or the dominance of the dollar is starting to slow down. They managed to bring price from the lows and shift it back up, but the strength was just not enough. Now let's just go over to the chart itself to understand where that image is right now. And as you can see, they've started to recover the wick. And price has been moving down lower. Now, whilst this has all been happening, I've been exploiting the idea that if the dominance of the dollar is starting to roll, then that means assets against the US dollar are starting to move up. So I've been building positions in Euro USD, quite a few positions to say the least. Check this out. Whilst dollar dominance itself was rising, Euro USD was taking a nosedive. So I started building all these positions. And we stopped out at the 0.99500 zone where I was anticipating that at some point they were going to come back up because of today's behavior in the charts. We saw a big move up. Now we're starting to see the dominance of the dollar starting to falter and Euro USD is slowly creeping upwards. Okay? We would project the idea that it's going to start moving up even more in the Asian session. We are projecting the idea that the dominance of the dollar is going to start coming down and recovering this violet vector wick. The principle would say that we expect price to come down in towards this zone. What does that mean for Bitcoin? Well, that principally means that Bitcoin should be moving up on that basis. Let's go into the 1 hour time frame. What is Bitcoin doing in relation to the dollar dominance? Okay, let me just clear this off. And for the record today, ladies and gentlemen, we saw that beautiful move today by Bitcoin, and they initiated the third hit inside of this zone. They didn't quite take that 21,800 zone that we expected, but we saw the movement and it came into that same area that they were able to hit and make the 3 hits to the high, which they achieved inside that zone right there. Now, with that being said, ladies and gentlemen, what can we expect Bitcoin to do now with the logic of the dominance of the dollar itself? Well, let's just bring up the chart itself with the dollar on the 1 hour time frame and split the chart up just to put things into perspective. So, Bitcoin rising. The dominance of the dollar over here, let's just change that up for you. Happy days. Now, a new hour candle has just started because it's 9 o'clock. We have got 1 more hour until the New York markets themselves actually close. Okay? Gold has been rising up. Happy days. Dollar dominance starting to reject this 50 EMA on the 1 hour time frame, and we're expecting it to start rolling over to recover this wick right here and come down into this wick as well. Remember, on the 17-hour time frame, we know what the story is. They're working the recovery of this wick. Ideally, we want to see price take a nosedive in the dominance of the dollar. And even though Powell is coming into the play tomorrow, ladies and gentlemen, and we do have the Jackson Hole Symposium currently underway. It's over a 2-day event. Financial participants and bankers are all having a conversation and discussing the current economic factors that are affecting the US and, of course, the world as well. They're going to be relieving and talking and putting pressure on Powell to encourage the Fed to be very hawkish, because they're starting to roll out the idea and logic of a dovish tone. And we don't want dovish. Okay, they're already releasing documents and articles saying that dollar longs are actually paired, so people are starting to slow down on picking up dollar. Could that be a reason that we would likely see the dominance of the dollar to continue to go down and start seeing assets against the US dollar moving back up? So when you come to trade, the first thing you want to do is pull up the dollar dominance chart. All right. Once you've done that, ladies and gentlemen, say to yourself, okay, where are we? So what time zone are you considering trading? Are you trading Asia? Are you trading US? Are you trading the UK? Pull up the chart and have a look at where the candle vector zones reside in the dominance of the chart itself. Now you can see here, look at today's price action. We saw the dominance of the dollar move up. Then they come and hit that daily open and brought price all the way back down. If you go into the smaller time frames themselves, ladies and gentlemen, you're going to see how the vector candles get recovered all the time. Look at this red vector zone right here. For recovery, they tested the daily open to the T and pulled back. Here is a little tip for you, ladies and gentlemen. Whenever price trades away from the daily open, whatever asset it is, if it starts to contain itself and starts moving back up and closes above a moving average and the daily open is nearby, price will magnetize to that zone. Bitcoin nearly did it today, ladies and gentlemen. Look at this. Here's the daily open for Bitcoin. Should appear. There it is. So in the New York session, they initiate the stop hunt rise. We had the 3 hits to the high right here. 1, 2, and 3. Happy days. Green vector candle recovery. Done. They drop price all the way back down. Recovery up to the 50 EMA, come back down again and miss the daily open. When it comes towards the daily open and moves away from it, as much as price magnetizes towards the daily open because that's where they were able to grab interest from, if it can move away from it, happy days. It means that the area of value inside this zone right here is agreed. They don't want it to go any lower because they've already done the business here. They want to just quickly bring it down here and get those weak traders to go long, to go short inside this zone and make them pay the price, which is why Bitcoin's reverted back up towards the moving average. Now, from now until tonight, ladies and gentlemen, Asia's going to show its hand. If the dominance of the dollar sustains and continues to move down, then we are likely to see Bitcoin move up in Asia and, of course, Euro USD to do the same thing and all assets across the board following suit. But tomorrow we have Mr. Powell having a conversation at 3 p.m. So the markets might get a little bit quiet. Is the Nasdaq preparing for it? Look at the Nasdaq. Completely flying up, ladies and gentlemen. Is the stock market already anticipating that the fact that the Fed is going to be aggressive? Are they factoring that into the charts? Or is this just another attempt to set up the shorts and get ready to run price back down? At the moment, Powell has a conversation tomorrow at 3 p.m. Red vector candle recovery on the Nasdaq. Happy days. We managed to exploit this trade. Check this out. Traded the Nasdaq futures. Where is it? And there it is. Couple of longs right here. 2,362 pips profit. Happy days. Range daily high would be the projected zone that I want to see a profit and close my trade. Happy days. We're done. Why do I trade on here? The reason why I trade on MT4, ladies and gentlemen, is I pay a very small spread to trade the Nasdaq, the futures. I'm trading contracts for difference. But especially in Forex, I pay a very, very small commission with practically zero spread. That's the benefit. And the execution is pretty quick as well. All right? So with this understanding about the dominance of the dollar itself, ladies and gentlemen, if you're going to start your trading day, the first thing you want to do is get your charts, split them into two, and pull up the dominance of the dollar on the left side of the chart, and then pull up an asset that trades against it and make your decision. Mark off the vector candles. You can see right here that we have got on the 5-minute time frame, we've got a red vector candle with gold. Let's go to the 5-minute time frame for the dominance of the dollar. What do we see? A green vector candle? Of course you do. You see it? So principle would say gold would trade into that zone. The dominance of the dollar would trade into that zone. Vector candle recovery. Happy days. If you are new to the channel, ladies and gentlemen, be sure to like and subscribe when we will be bringing you that fire again on Sunday night. As of Sunday, I'll be getting back into the swing of things. I'm out of holiday mode, ladies and gentlemen. I hope you enjoyed today's live stream at the New York midweek reversal point for Bitcoin. But we're going to bring more fire to you as of next week. So, ladies and gentlemen, have yourselves a wonderful evening. Mad love and respect. And I'll be checking in with you all tomorrow. Take care of yourselves, family. Peace.